Hey guys, thank you for tuning in to another episode of Ryan Makes Sense, where we talk about personal finance, investing, and chart analysis. I'm excited to announce I'm going to start reviewing stocks that have moved over 1000%. So in today's video, we're going to look at Red Rock Casino. Um, so ignoring the price of where it started to where it is now, let's talk about why I want to analyze stocks like this and what we can learn. So number one, when we see stocks that move over 1000%, I feel like there is some type of value that can be gained looking at a bunch of different factors. Number one, at the beginning of the move, was there a pattern on the daily, the weekly, the monthly? Number two, was there a material event such as a news release or new CEO, insider buying, Morgan Stanley purchasing X percent of the company, um, something of that nature? Was it more of a technical setup where insiders or maybe a small group of people um, purchased the stock and loaded and basically moved the stock up due to the supply? Thinking of supply and demand here. Um, Looking at momentum, looking at candlestick patterns, looking at long-term patterns, looking at a whole host of things. So we'll use the internet to see what we can find for like the Red Rock as well before Red Rock had the huge 1000% move. So we'll look at the old Finviz site, look at all the financial data points, and see if we can create a scanner that can find stocks that are ready for a similar setup. Without further ado, let's dive in. First things first, what is Red Rock Casino? By me just speaking about what this company is, we don't want to fall into the habit of assuming what the stock could be. So we're going to look at the website. We're going to see if there's any about page, see if maybe this is a conglomerate, maybe this is a satellite company, who knows. So I just typed in Red Rock Casino in the Googs, and it is almost a five-star hotel. It says five-star hotel. 27,429 reviews. Good for them. It's pretty cool. Let's take a peek at the actual website. Um, so it looks like it is a casino. They have hotel rooms, they have suites, villas, penthouse, a spa, they have amenities, I'm guessing, which are I'll open it in a new tab. I don't want to assume. They have casino, yeah, I mean slots, bingo, poker, race, sports, table games, um, fun stuff there. See and do, so a bunch of different things to do in the casino, eat and drink. Anyway, basically, okay, just kind of going in more into detail of what they have at the hotel slash casino. So, general casino, nothing too crazy there. So let's now head over to Finviz and look at the financial data points and see what the stock used to be and what it is now. All right, we are on finviz.com. This is one of the best sites in the world, in my opinion. We're going to look for Red Rock Casino. I don't remember the symbol. RRR. RRR. Let's look at RRR, ticker symbol RRR. Looking at it from a daily perspective, we can see a high of 54 and now it's at 40 bucks. But let's look at the bigger picture here. Okay, so a few things to note. Number one, the stock low was $2.54 and the high was 53.56. So I went ahead and opened this website, convertalot.com, and it'll show us the actual gain um, from Red Rock. So 250, let's see, the low was 254. High is 54.61. So 2.54 and then 54.61. I'm going to say this is, yeah, a 2000% return if you would have button at the very bottom, which, you know, I did not. But this is a case study as to maybe why or how we could have found it. So, thing to note really quick, this huge dip that happened here, let me adjust the monitor. This huge dip was from COVID, the health crisis. Almost everything in the stock market had a similar move, literally just huge capitulation. Insane buying opportunity, in my opinion, for the ages. Um, so that is hard to chart for, but maybe we can find other things like within these candles that would have allowed us to get a 1000% return. So, we are going to want to be looking at anything from March 2020. So I would say this is a bearish setup here. It looks like a bear. Well, we have a head and shoulders. So we have left shoulder, head, right shoulder, boom. Sorry, let me move my head here so I can show you guys what I'm talking about. So here we have the left shoulder, the head, and then the right shoulder drop. So let's actually look at the last, like these months here, because this is a bearish flag setup in my opinion. We have the move basically from this high to here, the flag drop. So we want to look 8 candles back, 8 months back. So let's just make some notes here, some high level notes. Um, so we want to basically track as much data and information as possible as to how we can connect the dots and find similar movers, and also how we could have found Red Rock Casino in the first place. So let's sign in. Let's just do a new blank document. While that's loading, I am drinking a vanilla latte that I made. Okay, I think it's done. Okay, so Red Rock Casino. Okay, so March 2020 equals 254. Um, 8 months prior equals bear flag. Am I typing? Am I typing? 8 months prior equals bearish flag. And then let's look at the head and shoulders as well. How far back did that go? So the left shoulder started right here, basically April 2018 to March. Well, let's see, when did it actually form? So left shoulder, head, right shoulder basically dropped off here. So Feb 2020, April 28, Feb 2020. And a head and shoulder setup is bearish. Um, but you can ride, depends on the angles. I'm sorry. It depends on the angles. So you want, if you are going to play the head and shoulders pattern, you always want to catch the last shoulder bottom. So you would have wanted to get in on this candle here and ideally gotten out here, but that's not really how stocks work sometimes. So not only do we have a head and shoulders basically ending right here, we also could see right here, this is bearish to me because we have a very bullish candle, very bullish candle, very bullish candle, three bullish candles in a row and nothing happens. That is a red flag. So just a heads up there. But we also have a bearish flag here from this high straight down to this. Boom, bomb. So yes. So RRR Casino, March was 254. Capitulation volume was 64 million. So let's do capitulation. Prior candle volume equals 13 mil. Capitulation bottom equals 64 million volume. Okay, so that's quite a bit. Good to know. So what we want to do now is find out what their sales were basically in this area. So what we want to do is let's just look at it right now from a high level to see if this company is actually good. They make 1.6 billion a year. They have positive income, which is wonderful. Price to earnings shows that it's undervalued currently, but in the future it's going to be priced okay. Their debt. Oh, look at that. That's a doozy. Gross margin 64%. That's wonderful. Earnings per share this year 197, 34 next year. That's great. Insiders are selling a little bit. Institutions own 98% of the company. So let's look here. Let's go to Fintel. And we're going to look at RRR. How much do they own exactly? $2.6 billion right here. 449 investors. Okay, who owns the largest portion? Basically the usual suspects: Vanguard, BlackRock. A lot of people taking their money off the table here, it looks like, except for Bamco. It's like Bamco might have added more. Good for them. And then also Massachusetts Financial Services started a position here February of 2022. Cool. All right, so 2.6 billion. Finviz says market cap of 4.1 billion. So it kind of looks like if we go here, you guys can't see it. Let me move my screen. So this is kind of a good gauge to look at for momentum, but we can see right here it's pretty steady. So this seems like a pretty steady stock in my opinion at the moment. And this is January 2023. So pretty decent moving in terms of institutions. So let's go back to Finviz. Company looks good. Good for them. Let's see any other notes. Let's open Thinkorswim really quick. So any other notes that we can gather? So we'll look at MACDs. We'll look at the monthly MACD, weekly and daily MACD. We can look at the RSI as well. Let's check the RSI out. That's important. Yeah, just waiting for Thinkorswim to open. And what we can do to see what Red Rock was like back in March is let's go to, oh gosh, Wayback website. website. And the Wayback Machine is what it's called. So it basically archives data from the internet if people submit it, essentially. So we're hoping that Red Rock has a submitted screenshot from Finviz. So that's loading. Thinkorswim is loading. Everything's loading. All right, so I just tested out the link and we can see that there is nothing saved, unfortunately. So we're going to have to look at the parameters from the balance sheet and income statement to basically gauge what the scanner should have looked like, which would have picked up the Red Rock stock. And so this is going to be on an annual basis. So this is what I'm talking about. So I'm back on Finviz. This is the Red Rock Casino, RRR, the one we've been looking at. So we're going to have to get everything manually. So we know the price is under $3. So that's going to be the first parameter that we can record. So setting up a scanner, price under $3. Let's do gross margin for 2020 as a whole. So what we're gonna do is we're gonna go to the income statement. So we have the total revenue and the cost of revenue. So basically how much they paid to earn this revenue. So to get the gross margin, we are gonna do 1182.44 minus 501.3. 681.14 divided by 1182.44 times 100. So 57.6% gross margin. 57 point what? 57.6%. That's really good. What else can we glean from here? Net income was negative, now it's positive, so we can't really grab from that. Let's go to the balance sheet. They had a bit of cash, so their quick ratio should be over 1. So let's just check, because if it's over 1 here, it's going to be over 1 back in... Oh, I'm sorry, here's 2020. The middle is 2020. Don't let me mess that up. Let's go to the top and see the quick ratio. It should be over 1. It's 0.7. So that means they are a little leveraged. So quick ratio equals 0.7. It's a little... I like quick ratio of 1, honestly. Okay, so what else can we look at here? Look at their assets. Total assets are very close to their total liabilities, which is not something I normally like. I think that's going to be the current ratio. I'm just double checking that so the metric that measures assets and liabilities, I think it is current ratio. And so how we can see that at a quick glance, there's a couple ways. So I'm just going to go to, let's do Control F for current ratio right here. It says liquidity ratio measures the company ability to pay short-term obligations calculated by current assets divided by current liabilities. Perfect. Okay. That's exactly what I wanted. So their current ratio was a 0.7. I prefer a 2x. But let's capture that. Here, current ratio equals 0.7, not the healthiest, honestly. Continuing to go down. The total debt. That's a lot of debt. Um, so right now it is, I'm sorry, I want to look at the middle row. Total debt is 2.879 and now it's 2.827. So they're slowly paying off their debt, but still, that's a lot of debt. So right now, again, current debt to equity. So we're not gonna worry about debt. So I'll just note here, debt was high, um, but current ratio, but glean current ratio. So that means, so a lot of real estate investment companies, a lot of companies that utilize debt as their strategy to grow, you want to make sure that they are not too over leveraged, too much underwater. Typically, the current ratio should help you identify that because as long as they have more assets and liabilities. But again, you also want to just check how much debt they have to how much money they bring in. So, for example, Red Rock brings in 1.66 billion in sales a year, and their total current debt is 2.8 billion. So it's a little too risky for me. But let's keep going. Um, Total common shares outstanding, 117 million shares outstanding, 107 million now. Let's just go up and double check. It should show 107 million. No, it's showing 53 million. So that is, I'm questioning, maybe I need to do some math here. Total common. Oh, I think that's shares outstanding and shares float. Let's just double check. It's 7.89 plus 53.14. 111, but five, they have 1.99 mil in short interest. Minus 1.99. Still 109.04. So I'm not sure at what point these metrics were captured. So just be cognizant of that. So shares outstanding is a little over, I'm sorry, total shares float is going to be under 100 million. Shares float equals 100 million, and shares outstanding also under 100 million. Okay, good to know. I want to see if we can get earnings growth. Uh, 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 Change in cash, crazy. Um, None of these really work for what we can measure on Finviz. So let's see. I mean, they don't really have any guidance baked into balance sheets because it only shows current data and past data. So we saw that, I mean, the EPS, I guess, would have been extremely high. Because let me just go up for reference. So I'm saying the EPS should have been really high because during this period of capitulation, during this period of capitulation, the stock price was well under what the company could have forecasted. So it would have shown a greater upside and greater growth in earnings per share. We're kind of seeing it here, like earnings per share 197. Again, we want to kind of have loose um, loose beliefs about when Finviz updates their data. So we know we're going to have EPS positive this year and next year. And thinking back when it's down here, it would have been considerably higher. So EPS would have been very positive. EPS this year, it would have been very positive. And EPS next year, I would say, you know what? If it goes this low and there's talks of major slowdown because travel restrictions and things like that, I'll keep EPS next year as just positive because it's, when you are guiding out during this crisis, you're like, oh my God, nobody's going to come to Vegas, things like that. So we're going to keep EPS this year very positive and EPS next year just positive. Oh crap, I just exited it. Let's see what else. And I do want to open Finviz again over here just so I can look at the metrics. Um, we can look at the market cap, I think. Let's look. So current market cap, 4 billion. If we take a zero off of it, that would put us at about 400 million. So this would have been a $4 stock at 400 million. So we're gonna have market cap be small. I don't really want to put us into a bucket right here. I would say it's going to be a small. Market cap is going to be small, under 2 billion. I feel like that's a good catch-all net to be in. So market cap equals small. Oops. Market cap small. Okay, so again, we're building out these parameters here so we can potentially find stocks just like this. But noting that we're not going to pay attention to debt, but we also have to be very cognizant of the quick ratio and current ratio. So back in the picture, let's what other metrics can we pull from here? We do know that the country is going to be the USA, so let's just add that here. It is consumer cyclical, resorts, casino. We'll keep it consumer cyclical. I mean, do we really? Yeah, we'll keep it because so sector equals consumer cyclical. Okay. What else can we pull from here? Ooh, the target price is above the current stock price. That's a good one. So that is generally from analysts basically giving their prediction of a stock. And if the analyst prediction is higher than what the stock price is, we can filter for that, which is nice. Normally, I don't like analyst price targets just because analysts are paid to talk their books, get the stock to move. So target price above price. So that means the target price is going to be higher than the current stock price. All right. Price to earnings. I mean, we don't want to have a price to earnings because some data points from Finviz don't pull some metrics in, which don't really calculate the price to earnings. So, or if it's a stock that doesn't really have earnings yet, but has, other things going for it. So what else we can add is excuse me. Um, Volume. So volume here is over 388,000. Let's look at Thinkorswim. Sorry for that rough transition. Thinkorswim, and we're gonna look at the red rock here, and we're just gonna notice the volume. And this is when we run this scan, if we're gonna look on a daily basis, we're gonna look on the daily. Let's go daily all time. So this is only for the last year, so we just have to adjust this really quick. Max, okay. Okay, so let me zoom out. I guess I can't. Okay, so we are very interested in, let's look at basically under $5.40. So we're basically interested in this area right here. So the average volume, we have 2 million, 3 million, 2 million, 2 million, 6 million, 5 million, 7 million, 3 million, 1.6 million, 1.4 million, 1.2, 1.9, 1.6. So we're going to say average volume of 500,000 because that's kind of going to have a safety net for us there. So average vol equals 500K. Okay. What else can we look at? Let's go back here. Let me move my head. Apologies. Okay. So looking at everything here, they do offer a dividend, which is crazy. We don't want to search for dividends because I don't. If they had the health crisis, they would not have had the dividend. Okay, so I think that we hit the nail on the head. I think what else we could look at is ROA is positive, ROE very, very positive. ROA equals positive, ROE equals very positive. Um, Operating margins, that's 29%. Let's just add that. Okay. Oh, wait, I'm sorry. This is going off of uh 2020. This is going off of today. I need to go back to 2020. Sorry. Let's go to the bottom. Okay, here we go. 2020 over here. Operating margin still positive. Look at that. 88. Okay, that's great. Good for them. Um, oh my gosh. So operating margins, we're just gonna have positive. And the ROA measures, let's just see what it measures. ROA. Assets. Return on assets. Calculated by dividing a company's annual earnings by its total assets. Okay, so annual earnings divided by assets. Annual earnings right here divided by, no, would it be gross profit? I don't know if it's earnings before or earnings after taxes. And let's see. So 1.1 bill divided by 4 bill, that's negative. So return on assets is going to be negative. So we're actually going to remove that from here. Let's look at ROE really quick. Return on equity. So that's going to be net income divided by shareholders' equity. Net income divided by shareholders' equity. Net income. So let's just grab the calculator. Net income. Yep, net income's negative for 2020. So that's also going to be a doozer. Let's take this off. ROE is taken off. Okay. Okay, let's just go back to the top, see if we can clean anything else. RSI. Okay, so now let's get into some technical indicators, but okay, so setting up scanner, Finviz parameters. So basically, we can take this and now search for companies that are similar to what Red Rock was back in 2020. So let's do that. I'm just gonna save this. Yeah, Red Rock Casino. Okay. So let's see if I can do this smoothly. All right, so I have Finviz up top with a blank slate. So we're basically going to plug in all these data points into Finviz and basically match it up to how Red Rock was in 2020 to see if we can find stocks just like this. I'm going to take myself off camera to show you, to let you guys see as much as possible. Let's go ahead and do this. I'm still here. Okay. So setting up a scanner. Okay, so let's look at all the parameters here. So we want the stock price to be under $3. We want the gross margins to be really high. Gross margin right here. Over 50%. All right. We want the quick ratio. Quick ratio. Where did you go? Right here. So it's going to be over 0.5. And then we're going to look for current ratio, which is right over here. And it's going to be over 0.5. And we currently have 235 stocks, but let's keep adding. So debt was high, so we're going to ignore debt. Shares float is under 100 million. So float under 100 million. And then shares outstanding is also under 100 million. So we're at 230 stocks. Now we're at 169. Okay, EPS this year is going to be very positive. Earnings per share growth this year is going to be very positive. So we're going to do over 30% because that's the highest we can choose. Earnings growth next year, we're just going to have positive. Market cap is going to be small. So we're at 38 stocks now. Let's keep the market cap where it is. Country is going to be USA. 34 stocks. Oh, this stupid ad. Come on, man. Okay. Okay. Sector is consumer cyclical. We have one stock. Average volume over 500,000. Still one stock. Okay. Operating margin positive. Operating margin positive. Nothing. Okay. Total Target price above price. Above price. Okay. So we currently do not have anything here. And the market cap is small. Okay, so we have 14 filters here, and we have to keep in mind, I'm just gonna blow it up now because we got all of the Finviz parameters. We're going to save this screen. So we're gonna call this Red Rock RRR. That's Red Rock Capitulation. Actually, let's call it Small Cap Capitulation. So nothing is showing because we are not in a capitulation moment at like currently January, beginning of January 2023. So nothing is showing up here, which is fine with me. I think it just goes to show that there's more downside to the stock market. I can show my face again. So there's more downside to the stock market, which is totally cool. We just want to remember, like, don't be discouraged because we're not seeing anything. I think this is totally normal. So we do want to keep this on the back burner, and we do want to scan on days when we have really red days. I think that might show us some hidden gems. Ooh. But now let's go to Thinkorswim and let's look at the daily setup, the daily MACD, weekly MACD, monthly MACD, also the RSIs. Let's just go ahead and I can take a picture of this. Why not? Maybe. Yes. All right. Where did my Google Drive go? Right here. So we have our Finviz parameters and our Finviz screenshot. Perfect. Okay. Do we have any insiders buying back then? I wonder. Let's just see really quick. I don't know if this data would show old transactions, but let's see. So this guy sold basically for options exercise reasons, it looks like. It does not look like it. I wonder if we can see. Yeah, we don't see it here. So that's fine. We don't need to worry about that. So let's go back to Thinkorswim. Let's zoom out. So yep, you can see they took when the crisis hit this area. You see these little green signs? These are dividends. Once it hit the health crisis, they stopped the dividends, but they brought it back. So just a heads up there. And this is kind of cool, just seeing how this resistance line was broken. But yeah, let's add our study sets. It looks like it froze. Froze. There it goes. I think. Continue. Okay. It is back. Almost. It's trying to think. Okay. It is here and there we go. So let's go to this period right here. This is where the health crisis happened. So MACD was super way under. So We're gonna bring it back. Where did it go? Right here. Okay. So this is the area we're looking at. RSI. Here we go. Not vol. I mean, look at that. Those buy volumes are beautiful. But we want to look here. This is what I was trying to open. RSI was 13. Oh my gosh. Oh my gosh. Let's go back to our Finviz scanner and add that really quick. I want to add that. That is really good to have. RSI equals 13. Oh my goodness gracious. Let's go back to Finviz. Here we go. Screeners. Okay, and this was the small cap capitulation. RSI oversold 20. Yeah. Oh my gosh, that is so freaking bananas. Okay, now let's save this for sure, for sure. We're going to call it small cap capitulation. We're going to do that. We're going to remove this. We're going to save changes. Okay, now I feel good about that. So TOS setup. So daily, oh, okay, TOS setup. So the daily is RSI equals 13. MACD was severely like bright red to light red. Let's see if I can get the actual data point. Gosh, look at that dip. Negative 4.97. I'm just gonna do minus 4.9. Come on. Minus 4.9. Okay. I'll make these notes available for you guys as well, so you can download them from the video down below. What else can we pull from here? Stochastic scan, MACD stochastic triggered. MACD stochastic equals yes. So that just basically means that it is a time to enter a position on the long side. I think you can set up something similar in Thinkorswim if you want, but that's not this video. So daily, I think we've captured the daily patterns. Let's look at pattern. I mean, the pattern was a blow off. I mean, not a blow off, but like just a straight downturn. Let's we'll come back to the pattern because I want to remove all of this fancy stuff. So let's look at the weekly and then the monthly next. Weekly. Perfect. Look how clean it looks. Okay. So here was my head's in the way. So here was the bottom. Again, MACD low, RSI on the weekly. About the same, honestly. Showing 20. I'll capture that. So weekly RSI equals 20. MACD, yep, bright red to light red. And let's see if we can get the measurement. It's going to be negative. Negative 3.6. MACD stochastic on the weekly, did it go off? Yes, it did. Okay. And when I say that, it's, oh, you guys can't see it. Let me move my screen. So the weekly stochastic is going to be this, the blue spikes down here. This is buy long, buy long, buy long, basically. There's a bunch of factors that go into those, so you want to make sure you're researching whatever is going on at the time. But basically, it's a buy signal. So MACD stochastic equals yes. Pattern, which we will review once we remove all the fun stuff. Okay, monthly. RSI, MACD, MACD stochastic, and pattern. All right, let's filter for the month. So it happened right here. Ooh, look how late the stochastic is, though. I'll look at it in a sec. But basically, it was the MACD was bright red to light red, BR to LR. Let's get the negative reading on that as well. So minus 3.3. RSI, gosh. Oh, right here. RSI was 2030. RSI 30 minus 3.3. And minus 3.3. MACD stochastic, look how far late it was. So it triggered right here. So this was, let me show you. Let's keep everything here. Look how late. So this would have been a false breakout here. Sorry. This would have been a false breakout. This would have been like, hey, buy here. So you would have bought at $16. 3 months later, 4 months later, you would be at the low, which is showing negative here, but it's actually 254. So you would have lost 80+%, which is crazy. So that's a false breakout. That's why you want to do your research on these stochastics. And then over here, this one did not trigger until $12. So there is a delay there. That is good to know. I'm gonna say MACD stochastic, no. Triggered at $12. Gosh, that's like 100, 200, 300% plus. That's so low was 2.54. So that's crazy. So we don't want to look at the MACD stochastic on the monthly for future reference when we're trying to find things like this. So now let's go back to Thinkorswim and let's remove all of these studies and let's just look at the chart raw. And let's go to drawings and create a drawing set 1000% review. So basically what I've done here is I removed everything to make it a clean, clear chart. Sorry. So pattern here, again, we have the head and shoulders. There's a couple patterns in here that are pretty bearish. So let's just take this all the way down. So, um, bearish setup here. I think this is a falling wedge where it breaks down and then it corrects up, which is wonderful. That's a good note. Let's note that as well. So going back here, um, so pattern, gosh, there's so many. So falling wedge breakdown, and how much percentage did it fall through the bottom? That's something good we want to know. So this is the bottom. 1118 down to 254. So let's just really quickly. It went from 1118 to 254. This will show us the in oops, 11. So it went 77% below. That's crazy. 11 or 77% snapback. How insane is that? Falling wedge breakdown minus 77%. We had a Head and Shoulders that was from April 2018 to February 20, so almost 2 years. Bearish Head and Shoulders for, let's be precise, it's going to be 1 year, 10 months. Yes, February, March, April, yes. 1 year, 10 months, 10 months, 10 months. And then we had a, let's look at how long that bear flag was. So this is the bear flag that I was talking to you guys about. I'm going to make it purple and thick so that we can tell it apart. So here's the flag pole and here's the actual flag. Right there. It's not very tight, but just for demonstration purposes. Bear flag. So this was a 718. That is August, no, July 2018 to the breakdown to Feb 20. I like how I had over there. So it's only going to be a 1 year and 8, 9, 10, 12, 1, 2. 1 year, 7 months. 1 year, 7 months. Okay. Um, so very bearish patterns here, which is good to note. Um, and this is just for the monthly. So pattern, let's look at candlestick. Let's look at the bottom candlestick. So this is what the candlestick looked like when the stock price was at the lowest, where it bottomed at 254, which Thinkorswim is going to show negative. So it is a large bearish candle. So it has a long bottom wick, and the price recovers halfway through, well, not half. 254, the next month is 5, about 100%. So bottom candlestick, long wick bottom. Um, Next opening candle 100% from low. Is that true on Finviz as well? Let me just peek. Let's go to RRR. Okay. I'm gonna go to the monthly, and okay, so the low 254, and then this candle finished well over 100%. Oh, 646, 254, 646. 2.54, 6.46. It's gonna be over 154%. Crazy. Okay. That's pretty nuts, if you ask me. Okay. So, we have our weekly pattern and candlestick. Let's look at the monthly now. I'm gonna remove all these drawings because this was just for the monthly. Remove drawing. Remove. I wonder if I can just Control Z out of here. Yes. Okay, let's look at the weekly. The weekly. Perfect. Okay. So this was literally. Oh, look at that weekly candle. Oh, that is so beautiful. My heart. Even though it's a red candle, it's still so beautiful. I'm gonna note that down. Does this? I just want to compare it to Finviz. So what I think happened is Red Rock doesn't show. Let's see. Yeah, it doesn't go back all the way. I have the free version of Finviz, so yeah. Anyways, wonderful bottoming candle. Not really a pattern. This is just kind of like a channel. So if I were to draw, it would look like this, which it's not really telling. Like it's not part of other patterns. So we wouldn't really have seen that if we were analyzing. So I mean, the angle kind of looks like it's ready for a fall, but you know, with the whole health crisis just coming out of left field, it probably, I don't know if we would have caught that. So pattern is going to be NA. Pattern NA, honestly, I wish it wasn't, but the candlestick, oh my gosh. Bottom candlestick equals, oh, beautiful. Doji up a bearish. I mean, how much? I mean, I don't. We'll keep volumes out of it just to be consistent. So now let's get the daily. Let's Control Z that channel. It's gone. All right, daily. And we need to look at the max time frame. Max. Okay. So here we go. This not really, nothing is really telling here. Again, it's kind of like the weekly channel where there was not much to go off of there. And as this fell through, like nothing really, look at it, almost touches. Nothing really is a giveaway here on the daily. Like we wouldn't have been able to identify this if this channel would have kept going or not. We really wouldn't have been able to tell. Like volumes 300, 500, 700, 1 mil, 300, 400, 500, 300, 700, 800, yeah, 1 mil. So I mean, honestly, and being realistic, I don't think, and I wouldn't have found this from this daily pattern. And I normally don't look at the daily patterns. I look at the bigger pictures. So look at this long-term resistance. Okay, so again, pattern NA bottoming candle is kind of the same as the monthly. So pattern, we're just gonna have NA bottom candlestick. similar to monthly chart or time frame. Okay. Um, so those are the main sticking points. Well, we can look at one more scan that I have. Um, this is basically a swing trading scanner. Let's remove lines. So this is like a buy and sell alert. Um, I don't really use it. Actually, I don't use it at all. So, I don't like using it on the daily. Honestly, look how congested this is. Like buy, sell, buy, sell, buy, sell. Like, come on, man. Um, yeah. So we can look at this on the weekly. This might be better. Yeah, look at this. Buy at 638. Still a little late, but I mean imagine if the price kept falling. So buy at 638, sell at $39. Buy at 38, sell at 49. Buy 47, sell 46, buy 46, sell 44, buy 33, sell 37. Right now it is not telling us to buy, which is fine. So let's look at the monthly too, just for fun. Yeah, the monthly is even a little bit more further out. Buy at $8, sell at 37. A little late to the party there. Let's look at the 4 hour. I think the 4 hour would be pretty interesting here. This one's probably be a little more accurate. It's a little dirty. When I say dirty, I mean it's just congested. So, not quite. Yeah. So, yeah. I think that wraps up our analysis. I think to summarize everything we found for Red Rock, it was capitulation. It was the prime time to get in. So, if we did not already have this on our watch list, I mean, the whole fear of it, the whole economy shutting down would have been discouraging enough for, I think, a lot of people. So again, this one would have been really hard to identify just with the Black Swan event. So we have a great scanner that we put together. We have some high level summary ideas here. Um, Other things that we want to pay attention to, I mean, there was not really, let's see the monthly and let's remove the studies. Remove all studies. What pattern do we see here? Do we see a pattern? Like this could be a cup and handle, right? We have the cup. Let me move my fat head. We have the cup here, handle, boom. We have Elliott wave, maybe. One, two, three. Not really a great um, pattern here, in my opinion. One of the things that I like that I don't see here is I like companies that have been around for 10 plus years. Red Rock has probably been around that long, but the stock has not. So it's hard to find cycles and be able to see what history has done or how history can repeat itself. So I don't know. That's my gripe about um, Red Rock Casino. The Fibonacci arcs look pretty good here, though. We have resistance, support, resistance, support, resistance, support, 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 resistance, support, resistance. So, I mean, if you're looking to get this long term, just watch out for the next year. Pay attention. Um, Vegas has been very bullish recently. I think they made 13 billion in 2022. So, yeah, no real patterns to call out on the monthly. For the yearly, I mean, this kind of Elliott wave. So this is more Elliott wave than the monthly. So right here we have 1, 2, 3, 4, 5, A, B, C, D, 1, 2, 3, 5, something like that. So again, nothing major to call out here. In terms of true stock price, what Red Rock should be, in my personal opinion, based off current data for 2022. Let me pull up my calculator. The market cap alone's a $40 stock, in my opinion. It's 41. Yep. Okay. So not bad there. It's priced pretty evenly. If we do 166, so this is going to be 1.66 billion plus 262.40 million. So we get 1.9 billion. So that's the sales plus income from that. And then we're going to divide that by the shares float divided by 53,140,000. $36 stock. So between $36 and $40 seems fair. The 200 SMA is about $28, so that could be a good grab. So yeah, do with that what you will. I do own a position in Red Rock in my M1 portfolio. I will put that in the description if you guys want to take a peek. But I think that wraps up our analysis on Red Rock. This would have been really hard to find without capitulation happening in March 2020. We've created a scanner to find similar stocks when capitulation occurs. Save it for your own keeping. Thank you for hanging out with me. If you made it this far, please subscribe to my channel. I really appreciate it, and like it as well. Thanks again. Talk to you guys later. Have a great day. See you next time. Bye.